Let's continue with the balance sheet now. So the balance sheet is done as at a particular point, so 30th of June in our example. Now, in order to see more, let's hide the income statement. The only information that we need is the net profit. Remember, net profit will go into owner's equity. So if we can number the columns similarly, so that will be column 1, 2, and 3. In fact, let's do that. So actually, I'll just put 1, 2, and 3. Okay, and net profit column, net profit information will go into column 2. So basically, we're just transferring 252,600 over here. And if you wish, we can maintain the same color scheme. Maybe that's a bit harder than I thought. Anyway, so let's hide the income statement. So hide, so we can actually have access to all the numerical information we need. I'll do a bit of formatting, and that's much nicer. Okay, let's move on. Balance sheet is presented in the following way. You've got your current, non-current assets, current, non-current liabilities, and then equity. So let's go from the top. We start with the bank. The bank information is given, it's 4,000. So we'll put 4,000 over here, and we get to highlight trial balance or tick it off. Then we have accounts receivable, but in this example, we have accounts receivable as well as provisions, so 2 accounts. So we need to calculate subtotal. Accounts receivable is 10,000. A provision for doubtful debt is 1,000. Okay, so we either put it as a negative amount, or we can say less provision for doubtful debts. Okay, now we calculate subtotal, which is 10 minus 1, so it's 9. Remember, we show subtotal by using a long line and writing the number on top. So 9 means it's a calculation of the numbers to the left, so that less that. Okay, GST receivable is over here, and it's $800. Closing stock. Remember, we don't need opening because we used that in income statement. We really need to go back to closing stock over here. Okay, now we can calculate total assets or total current assets. Okay, how do we do it? It will be 4,000 plus 9,000 plus 800 plus 2,100. And again, we can use the longish line to show that 15,900 is the sum of all the numbers to the left. Moving on, land and buildings, non-current asset. Land and buildings is over here, and the value is actually quite substantial. Okay, now machinery. Machinery is a little bit more interesting because machinery has accumulated depreciation as well. Okay, see that machinery has accumulated depreciation, so we'll have to calculate the subtotal. Machinery is 85,000, accumulated depreciation is 7. So perhaps it's not a bad idea to write less accumulated depreciation for machinery. And then the calculation will be 85 minus 7, 78,000. Okay, investment in AMP. Here we go. Our investment in AMP is 92,700. I think that's it. Don't know why we don't have sales highlighted. We've used it, so we can take it out. And yeah, looking good. All right, let's calculate non-current assets. It will be 1.2 million plus 78,000 plus $92,700. Okay. Now we can calculate the total assets. Now total assets have a separate heading. Okay, so we can put it in column 3 in its own spot. Okay. And don't forget the line. All right. So total assets will be calculated as $15,900 plus 1370700. Okay. That's your total asset. Moving on. Accounts payable, liability. Accounts payable is over here, and it happens to be 6,000. GST payable. liability 200. Okay, calculating total. 6,000 plus 200. Non-current liabilities. We have a loan. So remember, loan, it's a non-current loan because it's not payable next year. And we also have mortgage of 85,000. Okay. Calculate the total as 47 plus 85, and that gives us the number. Now total liabilities. Okay. And finally, net assets. How do we work out net assets? Well, it is a calculation, so you need to show it by drawing the line over here. Net assets, by definition, means total assets minus total liabilities. Okay, so let's do that. Total assets, 1,386,600 minus total liabilities, 138,200. Okay, so net assets. Okay, finally, moving on to equity. Capital. Capital is given. Okay, that's your capital, and we can highlight it. Take away, actually, apologies, add net profit. Okay, it will be take away if it was a loss. So add net profit. Okay, and what we might do, we'll just add them together. So it will be plus, okay. Again, we're showing subtotal by using the line, and then we need to take away drawings. Drawings for the year were $5,000. That will give us total owner's equity. And that's where you keep your fingers crossed and you hope that we've done it all correctly. And the balance sheet actually balances, and that's exactly the situation here. So net assets and total owner's equity must balance. And if they do, it's a very good sign. And here you've got it, financial statements.